Good morning. It's Les Christensen with Coldwell Banker Seacoast Advantage Real Estate here in the greater Wilmington area, and I work at the Leland office in Leland. And I just wanted to talk to first-time home buyers today about some of the things they would need in order to purchase a home. First off would be talking about mortgages. If you were to do a conventional mortgage, you could do as little as 5% down but then you would have to pay mortgage insurance. If you had 20% down, mortgage insurance would not be required. If you have the 5% down, you would be required also to pay your homeowner's insurance and your homeowner taxes as part of your monthly mortgage payment. If you're over 20%, you don't necessarily need to do that. FHA is another type of loan. You could get that for 3.5%, and again, you would need to pay the mortgage insurance and taxes and homeowner's insurance. If you're a veteran, you could get a VA loan. That's a 0% down, but you do have a mortgage funding fee for the VA, and that's paid at closing time also. Another thing that would be available in some areas is the USDA rural financing. If you're in a highly populated area, it probably would not be available, but it's mostly for rural areas. That is 0% down, and again, you do have to pay mortgage insurance. If you're a veteran, Coldwell Banker offers a veteran rewards program. And if you use me as your buyer's agent and my preferred lender, Lam Win with Alpha Mortgage, you may be eligible to receive a military rewards based on the sale price of your home. We can talk about that when the time comes. Some of the fees that you would have other than mortgage would be loan origination, which is part of your mortgage fees. I can't give you an estimate of price because a lot of those things are depending on the lender that you're using. Also, closing attorney fee would be something you would have to pay for the attorney, and we are an attorney closing state here. That would be about $1,000, maybe a little bit more, maybe a little bit less, but somewhere right in that area. One of the things you would need if you have a mortgage, you would need to pay to buy a mortgage title insurance policy for the lender. You can also buy a title policy for yourself. They're not very expensive. The lender will require it if you're getting a mortgage, but you don't necessarily have to have it for your own personal self. And it protects you against claims against the title or ownership of your home. So it's probably worthwhile having for the cost. And it's a one-time fee. You pay it when closing, and you never have to pay it again. You would also be required to buy a one-year homeowner's policy, insurance policy, and then every month the lender will require you pay 1/12 of your annual fee for that insurance, an escrow account, so that next year you would have the money to buy another year's worth of insurance. And the same goes for real estate taxes. They'll ask you to prepay a little bit of money towards the real estate taxes, and they'll escrow some every month in your payment. Some HOA dues may need to be prepaid, and there may be some HOA closing costs involved. Each HOA is a little bit different, so I can't give you an estimate, but you just need to be prepared for the fact that there are costs involved with the HOA that you may have to pay. Home inspections, HVAC inspections, termite inspections, and other inspections may be required, or you would want to do in either case. Typical home inspection, depending on the size of the home, might be $300 to $500. So just be prepared for that, and you pay for that at the time the service is done. Also, county recording fees may be required, and also there would be two deposits that you would have to make when you make an offer. One would be a due diligence fee paid directly to the seller at the time of offer presentation. That fee is non-refundable, so if you go under contract with the seller and you decide to back out after everything is signed, then you lose that money. There's also an earnest money deposit, which is a refundable fee up until the day 5 o'clock on the day of due diligence ends. You could at any time for any reason ask to cancel the contract, and you would get your earnest money deposit back. And that money is held either with the real estate firm or the attorney's office. So it's secure, and you would get that money back. If you have any questions or need some advice on things like that, please give me a call. Les Christensen, 910-616-1496. Thanks very much. Have a great day. Bye-bye.